Go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon podcast. My guest today, returning guest, friend of the show, Robert van Eyden, CEO at Scope Markets. Welcome to the pod.
Thank you, Rocco. Always good to be back. Always, it's a pleasure doing round number 2 with you as well.
Absolutely. We were speaking just before recording. What a coincidence. Last week I popped you a message. Please, would you come on the pod? We're high overdue. And then yesterday, everything goes to shit. The whole market basically just capitulated, everything doom and gloom. And now here we are. So we didn't plan this. This is not how we planned it, but we've got a lot of ground to cover. So let's get stuck into it. I don't want to specifically talk about the markets today. There's enough people doing it. I want to talk about your book called The Badass Trader. I mean, I've got my copy. It's been out for a while, best-selling. Congratulations on that, first of all.
Thank you very much. Yeah, it's a bestseller in South Africa. It's not worldwide, but
it should be. After this podcast, it will be.
I'll take it. I'll take it.
I've gone. It's my second time picking it up. I started 2 days ago. I'm almost half, and there's a passage I keep coming back to. It's called "The Trader's Manifesto" by our mutual good friend Louise Bedford on LinkedIn, and I'm going to, like an old Germany or pastor, I'm going to read from the good book for us. So it says, "Give me the grace to accept with serenity the trades that are completed and cannot be changed. Grant me the courage to enter new positions even when my trader's heart is wounded, because my trading plan determines it should be so. Let me trade one day at a time, not reliant on the whims and errors of greed and fear. Allow rationality to seep into my cells so that I'm not thrust into the company of the astrology-loving, crystal-hugging, magical thinking, gut-feel traders who yearn for the world to be different but never take actions to make it so. And finally, when the world around me is frothy with manic behavior, allow me to be calm so that I continue to follow my trading plan without remorse or regret and without anxiety or jealousy." How up to that?
Yeah, that is absolutely, yes. It's written by Louise Bedford, a good friend of ours and a very good friend of mine at the moment as well. I think she summed it up very neatly. I think, trading, as I mentioned in the book, Rocco, it's the hardest, easiest thing to do. And where it becomes really hard is basically managing your emotions. And she talks about astrology, and I think you can throw in AI bots as well now into the manifesto if she had to update it. But it's really hard because you are dealing with yourself, you are dealing with the market, and you are dealing with your own emotions, and that makes it very, very difficult because we are not wired to trade well. It requires a lot of uncommon thinking. And when I wrote the book as well, the book has actually been an outcome of my LinkedIn principles, which I started about 5 years ago. And then I was approached to write the book based on them. But on my weekly principles, I've been delving into the psychology of trading. You would never see me come up with a trading idea or view on a market. And I will never. That's not the intention of the principles. But when I saw that quote from Louise, I thought, this actually summarizes what trading's all about very neatly in in a couple of paragraphs, but in one page.
What advice would you give traders for managing their emotions? Two of the biggest would probably be fear and greed. Just let me touch on greed. For instance, you see a market like the Nikkei down double digits, and you say, I need to capitalize here. I need to, go short. This morning it's up over 10% again. So it wiped out traders on the way down. It wiped out traders on the way up. Let's get into that a bit.
Yeah, so fear is a double-edged sword. So fear, in a couple of years ago, the word FOMO wasn't in existence.
Yeah.
So the one fear is the fear of missing out. The other fear is actually getting back into the market because, it has moved in such a rapid and unpredictable manner. The only way you can manage fear in trading is to follow your trading plan. You need some sort of plan. So when you've made your profits and you've applied, for example, a stop loss, some sort of stop loss, you get out, and that manages your fear. And then the fear of getting in, only when you've got a valid signal based on your system, you get in. So fear can be managed both ways, when to get out and when to get in.
And greed, that's a big one, right?
Yeah, greed is a very difficult one to manage. Greed usually comes in when you look at trading from two aspects. The one is basically over leveraging. Actually, there are three, just thinking about it, is over leveraging, where you put your 500 Rand in and your 1,000, and your friendly broker provides you with leverage of 1 to 1,000, or some even go higher. And then you've got these dreams of basically, multiplying it, and it does happen. So that's where greed comes in. Greed also comes in when a trade goes up, up, up. And I'll use a current example like Nvidia. It went up to about 134, 135. And there's a saying, trees do not grow into the sky, neither do stocks, shares, or indices. There will be a point of a turnaround, and with Nvidia as well, and we saw it with the S&P 500, there's irrational exuberance that this market cannot turn. And guess what? It did turn. And guess what? No AI bot could pick this up. So the market did turn. And to manage your greed is basically, again, to put in a profit target or manage it with a stop loss. Also managing greed in terms of basically, being very, very careful with leverage. There's nothing wrong with leverage. I was reminded once, with great leverage comes great responsibility. And that's the thing. That's with all of these things. There needs to be responsibility. Greed as well can come in terms of, following news wires, we saw it in the COVID period with a lot of people, with the meme stocks as well, just following because XYZ was doing well. And then lastly, I've diverted from my three answers. I think greed also comes in because we see a lot of these vendors out there that promote a lifestyle from trading, the fast cars, the islands, the planes, etc. And the greed element comes in because I also want to have this and I also want to do it. And apparently it's very easy to do. So hope, fear, and greed are probably the three horsemen of trading failure.
The apocalypse. You mentioned an interesting point there, which is my segue into sports betting, because that lifestyle that you basically explained there, or the IG images of the playing, the cash and the courtside tickets, we've seen in recent months the likes of Dave Portnoy, Drake. There's a couple of people that I can mention there, flushing this sports betting lifestyle. And some people saying that the sports betting can be seen as a financial market on its own. Are there any parallels in sports betting and trading? And from your perspective, you've been in the market for a very long time. How do you see it?
Yeah, it's very interesting with sports betting because it seems to flip-flop between sports betting and trading.
Yeah, it does.
Because there was an interesting period when COVID hit, people couldn't do sports betting anymore. And then we saw a huge spike in terms of retail trading. Massive. Since COVID has ended, it's flipped again. So people are focusing a lot more on sports betting and less on trading. You can just see it by the number of retail participants globally. I think the biggest parallel is when you do not follow a trading plan and you do not have an edge. then sports betting and trading are exactly the same. It's a form of gambling. And they are also driven by fear, greed, and hope, exactly the same things. So that's where the peril lies. When you start applying a trading plan with an edge, so that means basically over time, your average winners are bigger than your average losers, then trading is not gambling. Trading theoretically also does not have a binary outcome.
Explain that to someone that's not maybe familiar with that terminology.
Yeah, so with betting, with most betting is basically you put a bet on your favorite team A to win. If team A wins, you get paid out. If team A loses, you get zero. With trading, you can enter in a position without losing everything if you, for example, apply a stop loss. It's not a zero-sum game in terms of gaming, where you can lose everything. All the capital you put in, you can lose. Where with trading, if you manage it correctly, you should not be losing more than 2 to 3% per trade. You can't do that with gambling as well. You can't position size. It's either I put 100 Rand on team A, but you can't say, well, with let's say if you trade an indice, you can put 2% of your capital on a position, which you can't do with gambling.
I think one of the interesting differences as well that no one really talks about is in trading, we don't have these figureheads like, let's say, Dana White or Drake or one of these guys that actually trade with house money. Dave Portnoy has famously been caught doing this in the past, where they would place like a $500,000 bet, but it's not his money, it's the sports book's money. They actually give him the cash to do it. So it looks like, oh, cool, if he can do it, then I can do it as well. But there's no risk for him.
Yeah, that is a worrisome trend. Look, the financial markets are a lot better regulated. Well, they are very well regulated, while the gaming industry is still trying to find its feet, especially the online trading industry. So, for example, in the world of trading, that would be, front running the market or insider trading, if someone had to do that. The other thing is why it does not work in the financial markets is just the size of the markets and liquidity of the markets. You'll not move a market by a $500,000 bet. It's massive. Even we saw it. We're talking current at the moment. We saw it last week. With Warren Buffett, decreasing his Apple stake and Bank of America. Yes, it did have an impact, but it didn't drive Apple shares to zero.
Yeah.
And it was a confluence of unfortunate events also last week. So it's a combination between Buffett selling, extreme market volatility, but you'll never see that in the financial markets. One person will not move the markets. If it is a very liquid market, it is potential, with penny stocks and small cap stocks potentially there, but there are a lot of bells and whistles and checks and balances in place to prevent this.
Yeah, very interesting. Let's shift gears to AI. You touched on it in the start. I mean, you studied machine learning. You were there from the start, for the people that know a bit about your history and me chatting to you. How have you seen the evolution of AI since those early machine learning neural network days to what we have now?
It's interesting, and I'll talk more for the financial markets where machine learning came through and neural networks. Everybody thought this was the holy grail, and they still think it's the holy grail. So in the last couple of years, nothing has changed. Everyone is trying to crack the secret code of trading success.
Okay.
Neural networks, machine learning, AI, whatever you want to call it. AI is not neural networks. Neural networks are basically systems to identify patterns and to predict future patterns. And we use it. Your iPhone uses neural networks for facial recognition, etc. I think the problem is all of these systems require historical data. And the financial markets is an open system. So a lot of AI, machine learning, algorithms, back then it was genetic algorithms, fuzzy logic, etc., work really well in closed systems. And a closed system is not the financial markets. The financial markets are open systems. And therefore they do not work, because the problem is there are always events that cannot be modeled. In the last couple of years, we had COVID, totally unpredictable. Markets tanked. No one saw it coming. We had the Ukraine war. It was telegraphed. No one, even the systems didn't see it. For example, last week as well, no one could pick up, that the mood would change. So where AI definitely helps is basically in terms of, helping your process, helping you manage the trade, even helping you to program. If one of the most common trading platforms at the moment is TradingView, and you can go into ChatGPT and you can put into ChatGPT, backtest the system and create Pine code for me, and you can plug it into TradingView. So it's made life a lot easier. Where IA also helps is in terms of trade and taking out the emotional side. So you can create a bot to say when to get in and when to get out, but you still have to define when to get in. AI can give you a couple of good ideas, but given, and I'm repeating myself, we are working with open systems. It will not work all the time. It will work sometimes, and sometimes for a long period, and I saw it many years ago. And it usually works in a very trending market, but in a trending market, everything works.
The more things change, the more they stay the same, eh?
Absolutely, Rocco.
Okay. Before I let you go, for aspiring, and this is maybe sort of a financial market question, but also just a general author, because you've published a lot of books in the past. If you say you feel you want to write a book, and you've been putting it off for a couple of years, you don't really know where to start, you don't know how to go about it, what would be your best advice for aspiring authors?
Yeah, look, I think, as I say, there's a book in everybody that needs to be published. So we've all got a lot of wisdom, and so there are basically two routes. So I've published 3 books. The first 2 I published via, Amazon. I use their publishing platform. That is pretty easy. They help you a lot along the way. I think the challenges with Amazon is that you will never probably see a hard copy of your book in a bookshop. So that is a bit of a problem. So coming back to your question, how do you publish a book? So my advice for most people would be, if you've got something, if you put away about 20, 30 minutes a day, just write.
Okay.
The biggest problem with most people is that they want perfection. So my rule is just write. And then once it's finished, you start editing it and you start looking at it. And also with today's technology, you've got Grammarly out there, you've got ChatGPT, you've got a lot of better spell checkers. That can be sorted out a lot better. When I wrote the last book, ChatGPT only came out in September last year, and I published in July.
Yeah.
So that would be the first step, write, and then edit. And then you do need to appoint an editor to go through your work. The role of an editor, I always remind people, and you must brace yourself for this. This is like round number 14 in a Rocky fight. You need to be extremely resilient, because the role of the editor is to make it readable.
Tell you how shit it is. Basically.
Will be very critical.
Yeah.
Will be very critical about your writing style. We'll be picking up things of inconsistency. We'll ask you a question that you think it's obvious, which is not. So the editing process, once you've got an editor on board, is very, very onerous, very long, but it's a requirement.
Yeah.
So if you've done that, then you're pretty much okay to put it into a Word document, convert it into the Amazon format, and you can publish. And it's quite easy. The other route is basically to find a publisher and then to submit. So I was
This
very
penguin
fortunate.
here. This little penguin.
Yes, yeah. So I was
Where's
very
my blur?
fortunate in South Africa. Penguin actually liked the idea of the book, but you're not there yet. So with a publisher, you need to submit basically a rough draft of the book plus the first chapter.
Mm-hmm.
And then what they're quite critical about is to see, how likely is the book to sell?
Yeah.
So you need to indicate, the amount of followers you've got a LinkedIn, Instagram, YouTube channels, etc. Because, for them, they are taking also a risk, and I'll explain that as well. So they need to know that there is a market out there for the book. Once they approve that, then lo and behold, you'll be appointed another editor. So if you think you're out of the woods with your first editor, you'll get another one. And you'll be back around 14 and you'll have to dig deep again. And then the process goes, and then you think you're finished. And then there's another surprise, a copywriter. So a copywriter is very similar to an editor, but this is the final round. So they pick up inconsistencies again, and you'll probably spend a couple of hours doing that as well. My advice for any person publishing, it is easier to get a book published in, let's say, for example, in South Africa than in the UK or in the US, then because it's a smaller market, and they're not overwhelmed by so many submissions per year. I'm still waiting for 2 submissions I made to 2 large US publication houses, which still haven't come through. So if you can, it would be better to publish through a publisher in, let's call it a smaller country and a larger country. The one tip I do want to give you, so there are companies that will help you at a fee. They are very expensive. There is absolutely, I did a lot of homework. There is no benefit using them. There's also no guarantees that they will get the book published and get it onto a bookstore. So those are the 2 routes, either Amazon or go through a publisher. Amazon is a lot easier, publisher a bit more difficult, but a publisher, at least your book is in a shop, and it does give you a thrill. Every time I'm in a shopping center and I see my book, it does give me a thrill. Initially, no, not anymore, but those first couple of months, any shopping center I went into and there was a bookshop, the first thing I went was to go look for my book. Now, I know it's out there and it's selling decently, but it's not it doesn't give me that thrill anymore of hunting down my book in the bookshop.
I hear you. Robert, thank you so much for joining me today. If the listeners want to go and follow you and check out your book, we'll put the link in the comments for the book, but where can they find you online?
So I'm on LinkedIn. That's my largest following at the moment. So, and then on LinkedIn, I produce the weekly trading principles, which I've been doing for the last 5 years. So, and it's getting good traction. So LinkedIn is the first one. I'm trying to move into Instagram. I'm not having the same success as LinkedIn. So I have not cracked that formula yet. Instagram. And then, if all things go well, by next year, I'll be releasing a YouTube channel with 1 trading principle a week. So I'm doing the costing at the moment, so it should be up and running, and I look forward to that. But to your question, you can find me. LinkedIn is where I will respond to you, and
go and connect with Robert on LinkedIn. Go and buy the book. It's called The Badass Trader: How to Trade Your Rate Reaches the Hardest Way to Make Money. Thank you so much for joining me. And to our listeners, peace, love, and prosperity. And we'll catch you next time. Cheers.
The seasons come and go. In the charts we trust. For fate we must. Deep down we know it's true. Just look at me and I will look at you. Stocks rise and fall, but I will stand my ground in the dark.